Welcome back. Well, just pull out a couple of stocks intraday. Vodafone Ideas, mystery stock, but has moved to high point of the day, and it's pulled IDFC First Bank along with it. So these are a couple of names which are looking quite interesting right now. NALCO, it's in ban, of course. That stock also moving to high point of the day, and cement stocks led by ACC moving to high point. Time now for D-Street Chatter. Nimesh is here with the word on market and some individual stocks. Nimesh, good afternoon. Tell us.
Hi, Anuj. Afternoon. So, relatively a lackluster day of trade. The volumes are on the lower side, and even the teams are quite thin at the dealing room. So that probably explains the kind of activity which is there in the overall market. But still, I understand that there is a market at close buying in some select large cap names, and probably that explains the kind of move we are seeing in the likes of Bharti Airtel, Reliance, and for that matter some metal names as well. That's the reason why you've seen some bit of a move in those stocks. In terms of sectors, while financial names are under pressure today, there is still a lot of interest in the telecom names, not only from the larger institutions, but even at the retail desk. I understand there is a bit of buying back into the likes of Bharti and Vodafone, and there is a hope that maybe you'll see some bit of relief from the government very soon for that particular sector. So that explains the move in the telecom names today.
Nimesh, let's get it more exciting then. What are the stock-specific news that you picked up?
So in terms of individual names, the first stock on my radar is CDSL, again a platform company back in the limelight. It's been hitting upper circuit for the last 2 days. I understand one of the reasons is there was a large selling pressure from an FII, and that seems to be out of the way, and the up move has started in CDSL. Actually, that rubs off into BSE as well, because BSE owns 20% in CDSL. So that's the first one. Second stock is IDFC Limited. That stock is buzzing in trade. I understand some bit of buying as well from HNI investors. There is a investor call next week, and there is a hope that maybe you'll get to hear more about the stake sale of the IDFC mutual fund, and hence we're seeing action in that particular stock. Third stock is Lemon Tree. While the entire hotel space seems to be buzzing today, but I understand there is a large selling pressure going on in Lemon Tree from a larger FII at an FII desk. So maybe you have to look at the delivery volumes quite closely in Lemon Tree. The last stock is Dish TV. That stock is locked at 20% upper circuit. In fact, it's been buzzing for the last 2 days ever since Yes Bank has asked the board of directors to move out. I understand there was a large block as well of 5 crore shares, and maybe a couple of HNIs have bought into today's block deal. So that will be an interesting stock to watch out.
Nimesh, thank you very much for that. And this is, I mean, you really want to pay attention to what Nimesh is saying as far as those stocks are concerned. Yesterday, of course, I mean, what he put out, 100% strike ratio in terms of what he was hearing and what actually transpired by later in the evening. SBI Life, for example, is one of those things he first put out here on D-Street Chatter. Mitesh Thakkar is with us. It's almost 3:15, 15 minutes to go to close. And Mitesh is going to tell us what trades you can take now for reverse trades when we come back on Monday. Mitesh, over to you.
So I think, Prashant, sometime in the day, I think Anuj covered the hotel stocks, and Nimesh was also talking about them. I think Indian Hotels is a buy with.
Okay, all right. I think we should just get, Mitesh's picks up for you. Indian Hotels is one pick. Target price and stop loss should come up for you. And the second one is PFC. So that as well should come up for you with the target price and stop loss. Do take note of Mitesh's picks. But let's move on. Then the August auto-debit bounce rates, they are the lowest since March 2020. Ritu Singh joins us. She's joining in to fill us in with all those details and data points. Ritu, over to you.
Thanks, Nigel. To begin with, the National Automated Clearing House collects data on auto-debit transactions, which is essentially when you give your bank standing instructions to debit your EMI payments, insurance premiums, utility bills, etc. So this data acts as a real proxy for retail payments in the system. And that said, there is some good news, because in value terms, the auto-debit failures that happened in the month of August are the lowest that we've seen since the start of the pandemic. They've remained elevated over the past couple of months and seem to be coming down now. So as of August, bounce rates stood at 26.8% by value, compared to about 28% in the previous month, and at 33% by volume compared to about 33.2% in the previous month. This means every 3 out of 10 transactions actually did not go through because of lack of sufficient balance in the account or other such reasons. This is relevant because it also reflects the current trend that we've been seeing a lot of banks report, where collection efficiencies have improved in the months of July and August, and that is reflective in this data. But important to note, this is still not back to the levels that we saw before COVID. So these are still about 700 to 800 basis points higher than the bounce rates that we saw before March 2020. So that is reflective of the fact that there is still stress in the system. But keep in mind, there are limitations to this data. It is not necessarily unique. And also, this is just one form of payment, right? So your cash payments, checks, etc., not captured by this. But all of that aside, it is a good proxy to gauge the level of retail stress in the systems.
Okay, Ritu, thanks a lot for that update. The market's really comatose in the last few minutes. It's a typical expiry day playing out. SBI Life has moved to low point of the day, and that's where perhaps there's this overhang of this block deal, so 4% down. ICICI Pru as well. In fact, today all these non-lending financials which have been flying high have corrected. Canfin Homes as well, down about 2.5%. Amrish Baliga is joining us. Amrish, good afternoon. Would you buy SBI Life here, 4% down?
I'll possibly wait a while longer because anyway, today because of that block deal, it has come down. I suppose we can see either 4 or 5% lower. I think at those levels, one should look at buying because whatever said and done, I mean, it's an underpenetrated market as far as India life insurance is concerned. And I'm in fact bullish on most of the life insurance companies, including HDFC. But then SBI Life, I'll possibly wait for a while longer for that 4 to 5% lower rates.
Okay, all right. Amrish, what about, some of these metal stocks are making a comeback. Now, in the last month or so, they have been relative underperformers,
Right.
ferrous as well as non-ferrous. But post the monsoon, normally you see demand pick up both here in India as well as globally, particularly in China. Your take on some of these metal stocks, the best is over the easy money has been made. But view from here? View from here?
My view from here is I'm not so bullish on the metals at this point of time. We could see some sort of a bounce back because of the sort of correction which we saw in the recent past. But I think more or less the best of the results will be possibly the Q2 numbers. And after that, we could start seeing some sort of a dip. So there could be possibly some more upside, which should be used for trading. And surely at this point of time, one should not look at a fresh investment in metal stocks. It's more of a trading bet.
Got that. I mean, what's been happening in coking coal and iron ore markets, both in China, ex-China, has been actually quite astounding. And I'm not talking about some, price trends over the long run. I'm talking about what's happened since the 1st of September. Big rallies, at least in those markets. Of course, I mean, it'll show up in steel as well, as we were discussing earlier. Amrish, afternoon. Any specific stock ideas you want to present? You usually have one or two? Yeah.
Yeah, in fact, this time it's a pharma company, Jubilant Pharmova, which in fact, they had demerged the life science business into Jubilant Ingravia. And now they are more into the radiopharmaceuticals, R&D services and proprietary novel drugs. Close to about 53% of the revenue comes from the specialty pharma and the balance from CDMO and generics. And they should be starting a new ophthalmic line in Montreal, possibly by FY23, and that should give them some more incremental sort of revenue. And they're also debottlenecking the API facility, which should increase the capacity by about 30%. So, in fact, over the next 2 to 3 years, I'm seeing a revenue CAGR of about 24%. EBITDA margin should increase by about 325 basis points because of the cost rationalization. They have a strong order book visibility, which is about 3,600 crores as far as CDMO segment is concerned. So looking at an EPS of about 84 for FY23, I have a price target of about 924, which is close to about 50% higher than where it is right now.
Okay, all right. Noted that view, Amrish. By the way, just take a look at the markets. Today as well, we went down to around 17,300. In the last couple of days, we've gone down to around that 17,250 to around 17,300. And from there, the market has bounced back. So that clearly seems to be the near-term support zone for the markets. In terms of stocks that are moving out, pull up Reliance Industries and HDFC Bank. Now, both of them are trading in the red, but they've cut its losses. Because they've cut its losses, that's why, in fact, the market's getting a bit of a leg up. That's Reliance Industries cutting its losses, and HDFC Bank as well as HDFC. Both those two as well should come up for you on the screen. HDFC has moved into the green, so market up close to around 20 points as we speak out there. Well, let's slip into a short break on that note, though. But as we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange, well, they've come together to promote investor awareness through a very special campaign, Informed Investor. Now that empowers you to make the right decisions with your money. For smart investors, well, here are a few guidelines to follow when dealing with your trading accounts. Register for trade alerts through email as well as mobile numbers. Also ensure that you thoroughly review the transactions alerts on a periodical basis. If you notice any discrepancy or error, you need to bring it to the broker's notice immediately. Keep all the documents, transactions, statements, as well as communication records ready for reference if you need any kind of resolution of a complaint.